everybody? Welcome to the Trading Market Technicals Morning Call video for Monday, February the 3rd. First day of the month, mutual fund inflows pretty much underway. I mentioned early on Friday that look out for a possible bounce. We do have inflows coming in, and sure enough, the markets did bounce. Actually bounced pretty hard right after around 10:30, and then just sold off at the end of the day, which obviously is not a good sign that the markets just can't keep any type of positive momentum going to the upside. Real quick on the numbers, Dow Jones again taking it on the chin, down 149. NASDAQ almost down 20 points, S&P down 11, and the Russell down 8. So in this video, I'm going to show you a bunch of obviously our indices and some sector charts. We do some of our indicators, trying to see where we're going to have any type of strength. Well, last night, China manufacturing came out worse than expected, and the markets really took it on the chin. Markets now are selling off again. We also have some chatter with the ECB coming out over in Europe, putting the brakes on any type of bullish momentum to the upside. So the markets are in trouble. There's no question about it. We have some bearish patterns. We're consolidating. We had some terrible volatility last week. Up one day, down the next. Up one day, down the next. Finished off the week lower. The end of the month of January, Dow Jones down 5.3%. The S&P down 3.56%. So not good, guys. The markets are definitely seriously are in trouble, and we need to really obviously play defense, reduce our share size, and obviously trade when there's the best setups. I'm looking for, again, I'm still looking to get long stocks that are high quality stocks pulling into some good support here, okay? Maybe sold off in sympathy. I am not looking right now to short the market until we break these consolidation areas that we had from last week, and then look for that back test just to make sure that the markets are indeed looking to go higher. Now, I did something interesting. I did a couple of overlays on some on the S&P gold and bonds, and I want to show that to you in a moment when we get through the indicator. So let's just go right to it. The bar chart momentum indicator, this is sort of like the McClellan oscillator. It reads overbought, oversold. This is more of the shorter term. I like to see this sort of like on a daily basis. Like when we had this real big down day early last week, we're looking for a bounce, and sure enough, we did get that. So anything below 99 or above 101 is overbought and or oversold. So right now, this is really telling us not much of anything. So, but I just want to show you, just take a quick look. Let's look at the McClellan oscillator, which is a phenomenal indicator. And it is, though. Remember, it's just an indicator. Price is what pays us. Price is king. Remember that. Now, but what it tells me here, it gives me some overbought, oversold readings where I could be looking for an anticipation of some sort of a bounce. Okay. Right now, this is not doing much of anything. So we have some where we could actually fall. Plenty of room to fall lower to for the market to sell off, guys. And when we get down to that 80-ish, 90-ish area, that's when I think I'm going to start looking to really start to nibble long or add to any long positions. If you're holding on a swing trade, that's when you really want to add. I don't really think we should be looking to add anything here. And again, if you're day trading, the markets are down pretty much across the board for the last 6, 7, 8 trading days. I wouldn't also be looking to get short. If you're day trading, obviously look to get some sort of a bounce. Get some green first into resistance before you look to get short here. All right, so now let's go with stocks above the 50-day moving average. Again, broke that bearish, the symmetrical triangle, and now back testing it. So this is not giving me any sign of hope right now. Okay, so this is really looking pretty ugly, and we could flush down to that 20% area here, and then I'd be looking for some sort of a buy. And what I'd like to see is some symmetry, right? All the indicators lined up in a row, at least the ones that I follow, before I really look to put a bet on the long side or the short side. At least for swing trading. All right, so now we talked about China manufacturing, right? It's all about China, the Japanese yen, the emerging markets. So this is something that you really want to follow, the EEM ETF. Now, it did bounce, but it is now emerging markets are getting clobbered again. So it doesn't look pretty for a good day for today. Even crude oil got sold off on a bad China manufacturing number. It's down 35 cents. The precious metals are barely just, well, they're up a little bit, but I think if the market really gets scary, you're going to see a big push up in the precious metals. We'll go over that in a moment. All right, so now let's take a look at the VIX. Speaking of volatility, we're at the upper end of the range here. A big push up would not surprise me, and then fail. Once we get that big push up, Take a look at these circles. This is what I'm looking for to get some sort of a buy signal in equities. Right now, it's not there. It's close, but it hasn't happened yet. So we'll be keeping an eye on the VIX as well. Now let's run into the metals here real quick. Now, gold really isn't doing bad at all. Now, we do have resistance, right? We do have that inverted head and shoulders pattern, but as you can see here, we're starting to unwind that overbought reading, which is good. Now, if we can get back above the 50 here and we start to curl back up to the MACDs, I really do think gold has a shot to the 200, at least to 1280, at least to re-challenge this area here, if not 1300. I do think that gold gets a big push up. Longer term picture in a downtrend, right? We know that from the monthly chart. I showed that to you many times. But right now, for a retracement rally, I think gold's got a shot here, especially when you have a real weak market. Now, the market's been acting very, very strange. You know, some of the asset classes are should be doing this. They're not doing that. They're doing something else. So it's kind of just erratic. It's all over the place. So, and it's fine, but when something like that tells me, look, let me just take a step back. I'm not looking to put a lot of risk on the table. I'd rather do a lot more option plays, selling spreads, even directional, but more of the lower delta trades, looking for a bigger move down the road. That's fine. Want to build positions while the market's coming in. That's also fine. But as for day trading, you're just going to get your head clobbered if the way this market is back up one day, down the next, having no memory of the markets. That tells me we have some bad volatility at these upper end of these price ranges. That tells me that the market's carving at least a top, at least a tradable top for now. All right, hasn't been confirmed yet, but we're going to show you in the charts here. All right, so now silver. Silver here, a little bit more volatile, broke this little area, but remember, here's the line in the sand here, $19. A break below 19 on a closing basis. Give it at least 2 days, 2-day closes below that, you should be out of silver. If you're in the longer term picture, then that's fine. But know where your stops are, guys. Very important, okay? Now, the reason why we haven't had much movement in the precious metals. If anything, the precious metals have been kind of drifting lower. Is our silent leader, palladium. Palladium hasn't gone anywhere but down. We had a nice big movement to the upside. We consolidated for pretty much most of January, looking for higher prices, and yet all of a sudden it just reversed. So precious metals basically have their own mindset. It's pretty amazing stuff. But that's why I don't get too hell bent on a move that you think is going to go up. Remember, it's not what you think; it's what the market does, and that's how you react to it. So just keep that in mind, guys. Now we're coming into support again, so let's see if we can reestablish a new base and start to break higher. But look what happens here. We have this little confluence area of resistance, 2088 to 20 to 50, and the 200 again. So we shall see. We're looking almost a death cross here. So hopefully this does not happen. All right, now. Let's go into something more interesting here. What I did was I stacked the S&P Spiders, right? The S&P 500, GLD, which is the ETF for gold, and TLT, which is bonds. Now, as you can see here, we have a movement higher. We had lower prices in gold, and of course, bonds didn't do too much. But what happened is now that we've broken down, right? We have this little bear flag here, and I'll show that to you in the chart segment. Look what's happening. Now, we are right here, guys. We're literally where I think is that I have a funny feeling that despite that we're having a sell-off today, I think the market pops up one more time. I don't think the market just goes straight down, and nothing really does go down and or straight up, well, aside from 2013. However, I think the markets pop up, back test this little area, and then fails. What's going to happen is this will go down a little bit more. We have this little W pattern here. You can see that, right? We got this W. Here's the left, the right, and the neckline. And I think that once we get that back test and fails, and then we really start to break down, I think bonds and gold, precious metals, safe haven sectors such as utilities will probably run much higher. And just want to make a point, seasonal trends, February is one of the worst months of the year. One of the worst months. So I think the market is not out of the woods yet, and I think there's a lot more selling to come, at least in February. Remember that, okay? So taking a look at this, I don't like what I see. I'd love to see the markets continue to go up, but I think we're going to have some major issues here. And if we do pop up, this will sell off, and bonds will come in a little bit. But what they'll do is they'll just make a lower high from these previous lows. And that's what I'm assuming. Right now, it's not happening. But if the market does pop up higher and gives it a couple, 2 or 3 days of movement to the upside, I think that's going to be a great selling opportunity. Once price gets up there and gives us a sell confirmation, that's when you want to get short the market and then look for precious metals and bonds to go higher. All right, but this is a nice little chart here, and I'm going to keep this up on the daily basis, and we're going to kind of review this on the morning call videos. All right, so here's another thing I want to show you. Here's our monthly chart, right? Here's our Fibonacci from high to low, and what do we have? We have the 1272 extension on the monthly chart. Okay, now this is the number I'm looking for, 1761. 1761. Now remember, we just started this month, so this chart now I'm not going to really revisit it until we either break below and see what happens in the mid-month. But 1761 would give us an outside month reversal. Remember that, okay? And look at the 20. The 20 month is at 1608. Plenty of room to the downside, and would still be bullish. On the weekly chart does the same, so just keep that in mind. Now here's the daily chart. Here it is right here. 1761 is what I'm looking for. We break below that, then I think the markets are going to be in dire straits. I think we're going to definitely have a bigger move to the downside. Remember, guys, it's just because we're flagging here. You see this bear flag, sideways consolidation channel, whatever you want to call it, whatever works for you. This here is not good. If we could take out 1800, like I mentioned on Friday, then I would alleviate some downside pressure, but it's not happening right now. So we just continue to move lower. We have some bad, and again, markets run in cycles where you have all good numbers, bad numbers, then market still runs higher. You know, now we have some of this bad data coming out of China. Markets don't want to hear it, so it's a profit taking. Now look at the daily chart. You can see we're oversold here. Right, we're below the 20. If the market stochastics can roll up along with RSI and MACD, then on a daily chart, I could see some movement to the upside, at least to alleviate the downside pressure and look to re-enter short up at this 1812, 1813 area, like I mentioned last week. Okay. I did have a couple of emails and asked me if I use MACD, RSI, stochastics on a short-term time frame. I do not. I only look at price action. This is just my analysis for end of day, early morning, but I don't look at it. I don't trade it at all during the day. Okay, here's the 1 hour, and look and see what happened here from last week. Just a bunch of chop, guys, and honestly, stay away. When in doubt, cash is a position. I so believe in that, and look at this, just a bunch of mess here. Okay, and now we're starting to break down again. 1761.25. Write that down. That's going to be a really important pivotal low, and I call that a pivotal low. It's all about the yen. Let's take a look at the Japanese yen futures. Now, what I did was I did a little top-down approach with the Fibonacci retracement from high to low, and I look at we are at the 38% retracement right now, and we have a little cluster up here, right up in here with these extensions. So a break above these two areas here, let's call it 985, 987. This right now is worrying me because we broke bearish symmetry and now we're breaking up. If the yen continues to move higher, we're going to have some continued weakness here, guys, in equities. Remember that. So watch the yen, and if you can't watch the yen, spot yen future, use the FXY, the ETF will give you 1-for-1 on the move, okay? But this is troublesome here. This is not good. We're breaking above the 38% retracement, and usually, you know, when you get some sort of a pullback, it's going to be somewhere around here, these little 10, 20-ish area here, and could go up to the 200-day moving average. And if that happens, you're going to have a full-fledged sell-off on your hands. So all about the yen here, guys, and I don't like this pattern. Now, hopefully this little cluster will cap it where the markets, where the yen would actually revert much lower. So keep that in mind, all right? Now, let's go into the charts. Look at a weekly chart of the SPY, doing nothing wrong. So if you can see the monthly chart of the ES, the Spiders weekly is still in an uptrend and holding the lower trend line here, which will be important if it gets down to that area, okay? Take a look at the daily chart, and again, 177 level, and the SPY is going to be the one I'm going to be watching today. Long-term uptrend line from November 2012 lows. Yes, we are a little bit oversold here, so I still think we get a bounce. I honestly just can't see the market continually just breaking down without at least an oversold bounce, a good oversold bounce where we can get short. And that's where I'm going to be looking for to look to start shorting the market, start building a small short position for the month of February. But I'm not going to be shorting in the hole here at 1772 last sale on the ES. Okay, but anyway, that's the number to watch, 177. Okay, transports. Another bear flag forming here, right? And if we break below this area, you're going to have this flush back down to the 125, which would bring the other indices along with it. Okay, now this is the leader here. The transports are the leaders. So Russell's secondary leader, another bear flag here, holding the uptrend line from March 2012 lows. So if this breaks, I think we're going to have a lot of downside here. And I can tell you, just take a look at some pivotal lows here. I mean, you got this one here. You got this little consolidation area here, and then you got this one here, which is, you got some areas, and this bodes well with the 200-day moving average. But we have some little support here, but we could flush pretty hard here, and this is not a good sign. So it's worrisome that we have a lot of bearish patterns here. Here's the Qs. Okay, same thing with the Qs. So again, oversold in the short term, looking for a bounce, and that bounce is going to get us an opportunity to get short the markets if price and we get some sort of a trigger as well. Okay, diamonds, same thing. Diamonds now broke this little area support, so the next step is going to be the 200-day moving average. No question about it. And if we really take it on the chin today, this we could get there today easily. The way the Dow Jones has been selling off here. GLD. Okay, we still got this trend line area here, and this is what I'm going to be watching. We have that left shoulder, head, right shoulder. Now we need to break back up, and breaking above this 2260 will push us up higher, at least to that 200-day moving average. So just keep that in mind, guys. I mean, I really do think that that if we get a lot of selling and some real fear in the markets, they'll come into the precious metals, at least for the short term. All right, so we got the oil and gas here, exploration, really not doing much of anything. But again, just showing you, I like looking at it. I got a bunch of ETFs. I scan through them, and we just watch now. Now we just watch and see when they break out. When they start to break out, we dial down into the ETF and look for the best stock for that setup. Okay, XLE, the exploration, the drillers. I like the Schlumberger, Halliburton, Baker Hughes. Those are the top three. Halliburton being least of the three, but holding here, I wouldn't be looking to get long it right now. Obviously, we're broke below this bearish rising wedge. Now, this is valid here, right? So, if anything, we have a short-term downtrend. So, what are we looking for is a bounce and fail, or for this high. So you see what's happening here. We have a lower high, lower high, lower high. So we want to see to make the next lower high and fail. That's going to be your sell signal to get short. At least the XLE or any of the drillers, at least for the short term. I think the longer term picture is going to be higher. So if you're a longer term bull on this ETF and this sector, I would just wait it out here for a little bit. But for a short term trade, this is looking better and better as a bearish setup for now. Okay, take a look at the USO. USO doing nothing wrong here. Actually, very quiet, consolidating, which I like. We don't want to see it break below the 50. I mean, can it? Sure. Is it still good? No problem. But this is what I'm looking for. The next higher low from here, from this area. Easy to manage. I want it to keep above the 15 to 20. If it get back above this area here, hold, and then start to move higher, then I think you're going to have a nice, good shot to the upside here. Okay. Now, crude oil is down because of that China manufacturing number, but is actually regaining some strength here, now only down about 26 cents. And we have the construction ETF looking fantastic here. This is a good sector. You see, this is holding up in a bad market. What is that telling you? When the market gets better, these stocks are going to rip. And I love this. I've been talking about this since December 2013. And any weakness, if you are a swing trader or a position trader, I would be looking for to add into these. Now, I wouldn't be chasing, but I would definitely be looking to add into this. Now, here's the XHB. It's pretty funny. The ETF for the home builder is really not doing much, but the individual home builders that we're following is doing quite well. Take a look at the Lennar, doing great. Broke back out. Friday on another down day, had a big move up. Again, any market weekend, any higher low, I'd be looking to add any higher low here. Okay. Same thing with Pulte, one of my favorites. Look at this down day, inside day from Thursday and Friday, broke out of this bull flag, and then we broke back up again. So this is great. So any back test of this upper trend line, I would be looking to buy. KBH, same thing, another one of my favorites. And the reason why, look at the consolidation here. Look at this big base. Anytime you see a big base like this, you have to be patient because it does take time. But once it indeed breaks back above it and now holding above the upper trend line of this base and now breaks back above this resistance and back test, you have to get long KBH. Okay, and again, this is for a longer term play. XLF. Well, banks are taking it on the chin. As you can see, we do have this a risk off. So anytime you get a risk off, you will get the banks really starting to sell off here. Citibank really took it on the chin. So I like Citibank and I like J.P. Morgan and Goldman for a trade for 2014. But we're not going to look to catch a falling knife. If you are long, you probably stopped out. But if you got a longer term picture, you could add. But wait for a base pattern here. I like to see some bases, 3-4 days basing, and then taking out that base, and that's when you look to get long. Right now, you just obviously have a bearish pattern here in Citibank. J.P. Morgan holding up relatively well, better than Citibank, but again, just kind of clinging by a thread. You have bearish symmetry in the moving averages, the 8, your 20, your 50. So again, guys, just sit back and watch, and let's just see what happens here before we start nibbling along here. Goldman Sachs here. Now, this is at the 200 day. If it breaks below the 200, all bets are off for me on Goldman. And it's going to need a lot more work before I really get interested on the long side as well. And lastly is Apple. You can see Apple needs a little bit more work here, up above the 200. Now, if Apple gave us a big flush to the downside, I would I'd be looking for a spot to start nibbling along. Maybe some longer dated option contracts, once you get a real big flush here. Now, remember, if we break that 200, you can get a lot of fund managers starting to sell Apple. So that's another thing. So we just need to be patient on that at all. In general, the markets are really moving up and down in a real dangerous form here. So when I see something like this, I think that the markets are carving out some sort of a tradable top, like I mentioned earlier in the video. So just keep an open mind. Remember, cash is a position. When in doubt, just take a step back. Don't overanalyze the market, but remember, let the market tell you what to do, and don't go against the grain here right now. We have a short-term downtrend, looking for a spot that we can possibly get a retracement rally, and then we will look for a better spot to short. Short into resistance, don't short in a hole. All right, guys, have a great day. We shall speak to you tomorrow. Take care.